Ever felt like you missed the boat on crypto? Like it's some complicated, risky game for tech geniuses and billionaires? Well, what if I told you that you've been deliberately misled? What if the real secret isn't about getting rich quick, but about a massive, unstoppable shift in how our world works? Stick with me because in the next few minutes, I am going to pull back the curtain on why cryptocurrency isn't just a fleeting trend, it's here to stay. And understanding this now could be the most important financial decision you make this decade. Let's cut through the noise. Forget the confusing jargon and the wild price swings for a moment. At its heart, what is cryptocurrency? It's simply digital money that isn't controlled by any single bank or government. Think about that. For the first time in history, we have a way to send and receive value directly between people, anywhere in the world, without needing a middleman to approve it, delay it, or take a huge cut. This is the core idea of decentralization, and it's a revolutionary concept. For decades, we've placed all our trust in traditional financial institutions. We trust them to hold our money, process our payments, and manage our investments. But what happens when that trust is broken? We saw it in the 2008 financial crisis. Banks made reckless decisions, the system nearly collapsed, and ordinary people paid the price. That event was a wake-up call. It's actually what sparked the creation of Bitcoin, the very first crypto. Its creator wanted to build a financial system that didn't rely on trusting institutions that could fail or be corrupt. Instead, it relies on mathematics and technology that everyone can see and verify. This brings us to the first big reason crypto is here to stay. It's a solution to a trust problem. In a world where faith in institutions is declining, cryptocurrencies offer a transparent and predictable alternative. Every transaction is recorded on a public ledger called the blockchain. It's like a giant, shared digital receipt book that can't be secretly altered. This transparency builds a new kind of trust in the code itself. Now, let's talk about something that affects every single one of us: inflation. You've seen it at the grocery store, at the gas pump. Pure money just doesn't buy what it used to. This happens when governments print more money, which devalues the currency already in circulation. It's like a hidden tax on your savings. Many cryptocurrencies, like Bitcoin, have a built-in defense against this. There will only ever be 21 million Bitcoin. Ever. That's written into its code. This fixed supply makes it a deflationary asset, more like digital gold than a traditional currency. As governments around the world continue to print money, more and more people and even large companies are looking to crypto as a store of value, a way to protect their wealth from being silently eroded by inflation. This isn't just speculation. It's a logical response to global economic policy. But crypto is so much more than just digital gold. This is where we get to the really exciting part that most people miss. We're talking about the rise of Web 3, the next evolution of the internet. If Web 1 was about reading information on static pages, and Web 2 was about social media and user-generated content owned by big tech companies, Web 3 is about ownership. It's an internet built on blockchain technology, where you, the user, can own your data, your digital assets, and your online identity. Think about it. Right now, your photos, your posts, your online presence, it's all on platforms owned by giant corporations. They control it, and they profit from it. Web 3 flips that model on its head. Cryptocurrencies are the native money of this new internet. They power everything from decentralized social media platforms, where you can get paid for your content directly, to play-to-earn games where the items you earn have real-world value, to digital art and collectibles called NFTs. This isn't a futuristic fantasy. It's being built right now. It represents a fundamental shift in power from corporations back to individuals. This utility, this creation of a whole new digital economy, is a powerful force that ensures crypto's longevity. It's not just an investment, it's the infrastructure for the future internet. Let's also look at the global picture. For billions of people around the world who don't have access to traditional banking services, crypto is a lifeline. In many developing countries, opening a bank account can be a bureaucratic nightmare, but anyone with a basic smartphone can download a crypto wallet in minutes and gain access to global financial services. They can receive remittances from family abroad without paying exorbitant fees. They can save money in a currency that isn't collapsing from hyperinflation, and they can participate in the global economy. For these people, crypto isn't a get-rich-quick scheme. It's a tool for financial empowerment and survival. This global adoption is creating a network effect that makes the entire crypto ecosystem stronger and more resilient every single day. Of course, we have to address the elephant in the room: volatility and regulation. Yes, crypto prices can be a wild ride, but this is typical for any new, groundbreaking technology in its early stages. Think about the early days of the internet. Remember the dot-com bubble? Many companies failed, but the underlying technology didn't just disappear. It became stronger, more integrated, and eventually changed the world. We're seeing the same pattern with crypto. And as for regulation, governments are no longer asking if they should regulate crypto, but how. This is a huge sign of maturity. Regulation, when done right, brings clarity, protects consumers, and encourages mainstream adoption by making the space safer for large institutions and everyday investors. The conversation has shifted from banning crypto to integrating crypto. That tells you everything you need to know about its staying power. So, let's recap the deep secret. Crypto's endurance isn't just about its price on any given day. It's about a powerful combination of forces. It's a technological solution to a crisis of trust in our traditional systems. It's a powerful hedge against the silent theft of inflation. It's the financial backbone of Web3, the next generation of the internet. And it's a vital tool for financial inclusion for billions of people worldwide. It's not just one thing. It's a multifaceted revolution. Ignoring it now is like ignoring the internet in the late 90s. Sure, it looked chaotic and uncertain, but the fundamental change was already in motion. Now, this is where it gets personal. You've heard the facts. You understand the deep forces at play. The question is, no longer will crypto survive. The question is, how will you be a part of it? This is not about telling you to invest all your savings. This is about urging you to start learning. Educate yourself. Open a wallet. Buy a tiny amount the cost of a coffee and just experience how it works. Send it to a friend. Feel the power of being your own bank. The greatest risk isn't volatility. It's being left behind by one of the most significant technological shifts of our lifetime. The knowledge you gain today is the foundation for your financial well-being in the future. So here is my call to action for you. If this video opened your eyes even a little bit, I want you to do two things. First, hit that like button to help this message break through the algorithm and reach more people who need to hear it. Second, and this is the important part, share this video with one person. Just one. It could be a friend, a family member, anyone who you think is still on the fence or confused about crypto. By sharing this knowledge, you are not just helping them, you are helping to build a more informed and empowered community. Let's start a wave of education together. Share this video now, and let's spread the word. Thanks for watching.